All right, thanks, Jeanette. I appreciate it. Happy Saturday, everyone. And again, just because we have had a couple of small hiccups, let me know quickly if you guys can hear me as well. Just a quick yes into the chat box, just to make sure you guys get the best experience, audio and visual wise. All right, excellent. Again, good morning, good afternoon. I see we have people all over the place. I'm coming at you from Switzerland today, so that's my afternoon. But I hope you guys are doing well. Markets, as Jeanette just mentioned, going through a rather historic period here, coming out of this really what is like a post-war situation. I always talk about this to our investors on our weekly calls, and we talk about how unique the situation is, not only from a stimulus perspective, but also kind of where we are in general. And I should probably show my screen, shouldn't I? Let me see if you can. There you go. There's my screen. Perfect. All right. So having said all that, we're going to walk through this step by step. What I want to make clear to everyone is that as we start to get this dynamics of the sort of post pandemic period, dare I say, and I say post, I am well aware that the world is still going through this, but there are going to be dynamics in place here that are going to make things even more interesting for traders. So what I'm going to show you guys today is a way that we've been doing for, gosh, 15 years or so. And this was actually originally something that I developed while I was at JP Morgan. And it's essentially a way of looking at the market to take advantage of what I call high probability reversal periods. And this can be used in any time frame. So I'm going to show you guys exactly how this works, because as we head into this period of really serious inflation, however temporary it may be, or transitory, as the Fed likes to call it, and we can certainly talk about that as well. We do actually think longer term inflation it's our house view is not going to be a huge problem, just largely because of technology being the greatest deflationary force ever, and we're about to head into a massive technological revolution, the likes of which the world's never seen. Nevertheless, we have inflation and it's real, and we do think volatility as a result is going to pick up. And I think there's one time in particular when these reversal patterns pay off greatly. I mean, they always work greatly, but this is like a really crazy good period, which is why I wanted to show you guys this today. It is this environment that we're actually just about heading into, literally about right now. So having said all that, this is me really sitting at my desk right here. I am, as it says here, I'm a father, I'm a trader. I'm also a portfolio manager at Blue Marlin Advisors, which is our investment management company. Having said all that, I'm going to quickly put my own risk disclaimer up for just a second. I will echo everything that Jeanette just mentioned before. Only trade with money you can afford to lose. Don't use your milk money, as she says. I think that's very true. Well, we have found over the past 20 plus years, I've been doing this now for 22, 23 years, is that the very best traders and investors actually do keep things very simple. Now they know what to look for, but otherwise they do keep things very simple. And so a lot of people, when they come into this business, either they've been doing this for a while or they're brand new, they're overwhelmed with the amount of information out there. Who would agree with me that there's a lot of information every day to chew through? Anyone agree with me on that? Right? And so what we need to be able to do as traders and investors in order to make this a successful endeavor is we need to be able to chew through that data avalanche every day, every week, every month, and eliminate the noise. And ultimately, the only way we can do that is by having a process. And so speaking of a process, the process does not have to be complicated. The process is about having a process. It's like, you have your morning routine, you wake up, you wash your face, you have your coffee, you do some sports, you go to the gym, whatever it is, right? Everyone's got a different routine, but you can probably do it you could literally do it in your sleep, right? And it's the same thing with trading and investing. So what all of this really leads me to is that you guys have probably noticed that once everyone's on the same side of the trade, it tends to go the other way. Who's ever seen that before? You find an idea, whatever it is, a stock, an ETF, a currency, or a futures contract, and you have a great idea on it, but you see everyone's got the same opinion, or the news headlines are all over the place on the same direction, and ultimately, of course, that kind of is the top or the bottom of it all. Like, for example, think back a year ago, in well, I guess a little bit more than a year ago, roughly March of 2020. When obviously everyone knew the world was falling apart, greatest the recession ever. The world economy really comes to a halt. The stock market goes straight down to 35% in a matter of 3.5 weeks, and that was it. Everyone was bearish, but that was the bottom, right? And so one way we can look at this is by charts. And the great thing about charts is, I'll talk about more about in a minute, is that they're very visually focused, and there's a great benefit to most of us because most of us are very, very visually focused. So this is the chart of a stock, and you can see, and I remember this very specifically in this particular stock last year in Oracle. Stock had sold off. There was a lot of reasons to be bearish to stock, and of course, once everyone was on the same side of the boat and everyone was maximum bearish, that was time to start buying the stock. So, but what if there was a way to quickly and efficiently find when everyone's on the same side of the boat? What if there was a way to do that? And there actually is, and I'm going to show you guys this right now over the next remainder of my period of my presentation this morning. What if there was a way not only to look at this through the lens of price action, but really understand the investor psychology behind it, all with one simple graph? What if there was a way to figure out when something is getting crowded, right? That's really what we're trying to get to. So what we know is that the best traders follow a simple but a repeatable process. So let's have a look at a process that really, really works. And this process truly has the power to literally forever change the way you look at the financial markets, and it's very, very simple and straightforward. I actually think, and I should have said this before, all the people that we work with, whether it's institutional investors, private investors, high net worth, average people all over the place, what we know is that the people who are not yet profitable, or not yet as profitable as they would like to be in trading and investing, it's usually very small changes that's keeping them from being profitable. So I'm going to show you guys a small change you can make that if you do this right, you will be much more profitable than you are right now, if not extremely profitable very quickly, depending on how serious you take this. So we'll show you guys how this works right now. But again, the great thing about this whole thing is that a visual aspect to the markets is what fits most of us best. Why? Because we know that empirically 60 to 80% of people are what's called visual learners, right? And so if you can see something through the lens of a series of pictures, you'll have an easier time to learn this. And one of the great things about the visual aspect of it all is that we have all these tools, right? We have charts of different types. One of those charts that you can look at involves candles. Who's ever used candlesticks before? And there's an overly simplistic way of doing it that mostly just gets you confusing and bad results. But what we do know about things like candlesticks, if you do it right, they can really allow you to see something in the market through the lens of not only price action, but also, and this is the most important thing, through the lens of investor psychology. Who's ever used a candlestick before? Give me a quick me, or yes, or good morning, I'm awake. I know it's early for some of you guys. I understand it's 6:15 in the morning on the West Coast. All right. So the point is that the candlesticks are at a very basic level, are too basic, right? If you just look at a candlestick and you just look at a chart, it's probably not going to work for you. But what we also know is that the candlesticks there's too many of them out there to learn. So what we like to focus on is show you guys a way you can actually use this in a way that really works by simplifying it, and by only focusing on, let's call it the quote unquote pattern that actually has a really high probability of working, right? But again, if you just think you're going to look at a candlestick and start making that your base case for investing and trading, that's probably not going to work for you. But you have to look at it in the right way, and that's exactly what we're going to spend some time on right now. I don't want to go through too much of the candlestick, but essentially a candlestick just allows you to look at price action. And it basically gives you, it breaks down any time frame, whether that's a daily time frame or a weekly time frame or an intraday time frame of 5 minutes or 15 minutes or whatever, and it breaks it down into the open of that time frame, the close, the low, and the high. And that's really, really important, because it gives us a lot more information, not just from a price action perspective, but again, I'll keep mentioning things through the lens of investor psychology. And I think if there's one thing that I see people that use candlesticks don't do correctly, is that they simply look at the price action part, and it overshadows everything else, and that kind of is ultimately why they don't see any results. So what we know about candlesticks is that, yes, they're visual, as I said, as a sort of quick midpoint summary, but we also know is that they tell us and show us investor footprints, or again, how investors are positioned. And the way you can do this is by looking at extremities of emotions. And I'm going to teach you guys right now through over the next 5 minutes or so, maybe 10 minutes, exactly what the extremities of emotions looks like more often than not. To give you a quick preview before we get into it right now, you guys can see this pattern developing here. And again, I want to make sure you understand this. If you've used candlesticks before and you're right now at the point saying, oh, this is just another dude that's going to waste my time looking at a candlestick pattern, no. What we're going to look at here is teach you how you can use a specific pattern and why it is so important to understand the investor psychology behind it all, because that's really what makes it work. So this is the pattern we're looking for. Let's have a look at it in a bit more detail. Hashtag hammer time. You guys probably, if you're an 80s baby or a 70s baby or someone who lived through the 80s, you know what I'm talking about here. So let's go ahead and just kind of go through the rinse and repeat and repetitive game, so you start to see the pattern, and then we're going to get into the important part, which is what it tells us about investor psychology and why this really, really works, and why most candlestick analysis outside of something like this is not really all that helpful. So let's have a look at it and walk through it together. There's a hammer, and I'm going to walk you guys through what that is, and there's a buying candle, and then you can see what happens to the price action. It goes higher. Let me give you another example. Here's Apple. You can see a downtrend. Then you can see that hammer candle, which I'll define for you in a second. It's right there. And then you can see what's called the buying candle. We call that the follow-through buying candle. And then, of course, you can see what happens to the upside. Now, again, some of you guys might be saying, oh, another candlestick pattern, right? That's great. I don't need that. Well, you probably do, because here's what we're going to do. We're going to show you exactly what the psychological pattern of this aspect of it all that makes it work so well. So let's first of all define what happens at this point in time that we define by this word or by this candlestick called a hammer. So what happens here is that you have a shift in investor psychology that's about to happen. Why? Because as a stock or an index or a currency or a commodity or a cryptocurrency, whatever it is you're looking at, let's assume it has been going down for a while. And it starts getting to this point right here, and investors try to sell it down even more. But something happens within this bar, and this could be a 1-day time frame, this could be a week, this could be a 5-minute time frame. But whatever happens here within this, what happened within this time frame is that the sellers, they reach a maximum point of selling, maximum point of bearishness. So there's no more sellers left down here. So as the sellers ran out of steam, the market started reversing higher, so much so that the candle ended up closing at the upper end of the day's trading session, or again, if that's a 5-minute chart, at the end of the 5-minute bar. And then what's really important and what really makes it work is the significant buying of it all, right? You have to have the significant follow-through buying candle. Now, let's talk about the investor psychology of it all for a little bit more before we can look at a lot more examples. And by the way, we're going to go into the current market right now as well. So in a few minutes, I know it's a Saturday today, so obviously all markets except for cryptocurrencies are closed today. but we're still going to go into the market and I'll show you guys stuff that just happened, yesterday, this week, the past few weeks, whatever you guys want to look at, so you guys can see that this really, really, really does actually work. Let's talk about it through the lens of, say, an individual person, and then we'll talk about algorithms as well, and that's why this works so well. So again, let's assume an individual person was very bearish and they were shorting the stock all the way down or selling it or whatever, and then they came into this day, but the market reversed on them, and that scared them because the market stopped going lower, and then the very next day the market went higher, and that basically squeezed their short position, right? So they had to cover their bets. Algorithms are very keenly tuned into these types of days, not purely from a technical perspective, because it's not really technical. What it has to do is everything about investor emotions. Give me a quick yes if that makes sense so far, folks. Right? Because we're going to go a lot deeper into this so you truly understand and really literally like tattoo this pattern sort of to the back of your heads, if you will, right? Because again, it's not about just a pattern. It's not about the candlestick. It's about what it tells us about investor emotions, about institutional investors, what they're doing, and about algorithms. It's all of that stuff combined. That's the important bit. So let's have a look at a few more examples so you guys can really start to see this. Downtrend, hammer candle, and there's that follow through, right? So sellers were in charge. They failed keeping the market down. The very next day, the market ramped higher. So what happened here is that algorithms sniffed out this lack of selling pressure that eased off. They come in and they buy the market, and of course, it ends up going higher over time, as you guys can see, right? So that's what we call the reversal pattern. So that's the algorithm way of looking at it. You could look at it through the lens of investor psychology, right? There was no more sellers left down here. If there's no more sellers left, the only thing the stock can really do is go higher, or I guess it could go sideways. But these days, with the algorithms doing what they're doing, the odds are pretty high the stock ends up bouncing, or bouncing very strongly. Here's an example in an ETF. GLD is the ticker symbol. It tracks the price of gold. And you can see a downtrend. Can you guys see the hammer candle? Right? It's right there. Can you guys see the follow through buying candle? It's right there. By the way, this came out on an up gap. So not only did the algorithms notice the end of the selling here, or not only did sellers really get exhausted, on the next day there was almost panic buying. And of course, you can see what happened after that. The stock marched higher, or in this case, it's an ETF actually marched higher. How about here's another ETF, downtrend. Can you guys see the hammer candle? It's right there. How about a follow through? It's right there, right? Again, same pattern over and over and over again. Now, some of you guys might be asking, well, this is nice, Serge, but what if that follow through buying doesn't immediately happen the very next day? Like in this example, see that? We have a downtrend, we have a hammer candle, but can you guys see that the follow through buying didn't happen immediately the day after? You can still have a successful trade, because in this case, the follow through buying candle did happen 2 days after, but the odds are lower. By our estimate, the odds are about 30% lower that this ended up being a serious, meaningful reversal. And you can see this trade would have still made money, but ultimately it failed and the market went back down, right? Let's look at another example. How about here? Downtrend, hammer candle, and yes, we had a follow through buying candle, but it didn't happen on the very next day. Still would have been a profitable trade, but it didn't last all that long. Now, granted, even if you would have entered that trade here, you wouldn't have lost a lot of money because it ended up just being kind of a flattish curve after the initial rally. But again, the reason why the follow through buying is so important that it happens on the next day is because what we're trying to do is we're trying to take advantage of investor emotions having extremely shifted to one side of the boat, in this case, extremely bearish, right? You can also have the same thing happening when it goes extremely bullish, and algorithms at the same time are sniffing this out. Big institutional investors with skyscrapers all over Manhattan, Hong Kong, London, LA, anywhere you can possibly imagine, with tons of computing power sniffing all this stuff out. Are we good so far? Is this starting to make sense? So again, this is not about me teaching you just a boring candlestick pattern. I'm trying to teach you what we see in the market every single day, why this pattern And again, we call it a pattern at the surface. It's much more than a pattern. It's essentially being able to see what happens in the market within very complex structured algorithms all over the world, institutional investors, investor psychology, right? So this is really, really important. Let's look at another example. Downtrend. Can you guys see the hammer candle? Of course you can. We've just looked at 20 examples. It's right there, right? Follow through buying, and again, we're off to the races. So let's talk about stop loss. So some of you guys might be saying, okay, well, Serge, this is nice, but what happens if a trade goes against you? Who wants to know that? What happens if a trade goes against you? Right? That's what you all want to know. Well, let's talk about it. Well, this is another great example of this hammer candle. Let me walk you through this one more time. I want to make sure you guys see this. Downtrend, sellers get exhausted. Algorithms, institutional investors, smart money for the lack of a better term. I don't like that term, but you know what I mean. They sniff this out, and just as everyone's getting bearish, boom, they come in and they take your money. Who's sick and tired of that move? Anyone? I certainly am. So this is a great way of helping us figuring out exactly when it's likely that they might start doing this. I'll give you one more example, and then we're going to look at the stops and all that kind of stuff. Downtrend, hammer candle, follow through, off to the races, right? So where do we get out? What is the worst case scenario, last resort stop loss? Good question, right? Well, it's right there in front of you. So we've just looked at this pattern together right now for the past 25 minutes. I think you guys are starting to sense what that pattern looks like. So if you get into this trade on the follow through buying day, right? Because you need this. This is important. This follow through buying day or candle, again, this could be an intraday chart. This could be a 5-minute chart. If anyone in here is a day trader, just imagine these being 5-minute charts or 1-minute charts. If you're an investor, imagine these being weekly charts. If you're a swing trader, imagine these being daily charts, right? So let's say you buy here at the end of this candle. Well, if the trade then goes against you, your absolute last resort stop loss, and you can get out much earlier than that, but your absolute last resort stop loss is here, right there where the red line is. But let's talk about why. Again, it's not about me teaching you just another boring candlestick pattern. That's not what this is. This is about understanding how the algorithms work and what saves you from becoming prey of the algorithm. So this down here, this bit is where the algorithm sniffed out max resort selling, panic on the part of investors. That's why they bought here. They either started buying here or the next day. We don't exactly know, but within this vicinity, they started buying. So if this is their reference point, what do you think these algorithms are going to do if we start dropping below there? Any ideas? What do you guys think if this is their buying point? If the market drops below there, what do you think algorithms are going to do? They're going to sell. Exactly. That's exactly right. They're going to switch to sell. That's exactly right. They're going to take you, who has now bought this, right, and they're going to squeeze you in the other direction. Who's ever seen that happening to you? Right? And again, there's a very specific reason why this happens. And this is not a personal thing. These algorithms don't know your name. They don't say, oh, Jack, I'm going to go after Jack today because Jack bought the stock here. So now he's going to go below here. And that's not what the point is, right? So we buy at the end of this candle. This is what we have where we buy. We need this candle to confirm that the algorithm are actually buying. We know that this is where the point of maximum frustration was, the point of maximum selling. The algorithm sniffed it out and they either started buying here already or here. We don't know and it doesn't matter. But what we do know is that this is a reference point, right? So this is kind of like solving a simple algebra problem where you have to solve for X. This is X. X marks the spot. Does this make sense? Give me another quick yes if this makes sense. I just want to make sure you guys see this. So let me show you what this looks like on a stop loss level, right? So if you wanted to look at a stop loss, here's another example. Downtrend, hammer candle, follow through buying. So if the market were to drop below this point, and again, that's your last resort stop, you can get out before. I'm not saying you can't get out before, you can, but this is your last resort stop loss. Are we good? So some of you guys might be saying, Serge, this is nice, but you know what? just show me if this can actually work in other time frames than, let's say, the daily time frame. We've already touched on this a little bit, but I want to make sure you guys see this. The reality is that this pattern is repeatable and it works in all time frames because algorithms work in all time frames and because institutional investors also work in all time frames. In fact, institutional investors by and large are investors, right? So this pattern you're going to see repeating itself on investing time frames, meaning multi-month, multi-quarter, multi-year durations. It certainly works on swing trading, meaning multiple day to multiple week positions. And yes, you guessed it, it also works for day trading. But hey, Serge, I'm not a stock trader. Does it work for other stuff? Well, it works for equities. If you think there are algorithms in ETFs, then yes, this is going to work in ETFs, and of course it does. Of course it works in options. Of course it works in futures. And hey, if anyone is let's say a cryptocurrency trader, of course it works in cryptocurrencies. Why? Institutional investors are in there as well, right? So this is important. So let me just kind of show you this, and again, like I said before, we're going to go into the current market so you guys can see that I'm not just making this up. But here's just a historical example, and we're going to go into the live market here in just a minute. And again, it's Saturday, so it's not live, but we will look at the current market together right now. So here's, for example, the Russell 2000. This was the buy signal that we received from our indicator using this predictable pattern on the weekly chart. And the Russell 2000 then ended up rallying, gosh, I don't even know, I think 100% or more. This is a weekly chart. How about on a swing trading time frame? Here's the NASDAQ 100. You guys can see the pattern, boom, right? Here's a time frame. Here's another time frame on the swing trading chart. Again, I want to just show you guys the pattern. These are all pretty recent examples. I just took a few screenshots so you guys can see this. And again, we're going to go into the current market right now so you guys can see I'm not making this up. Yeah. How about intraday trading? How about day trading? How about day trading? Right? How about here? How about here? And there's a great question, and I don't want to take too many questions through the presentation. We're going to get through all your questions in a bit, but Kevin's asking a tremendous questions. He's asking, how about smart algorithms, which learns to set trades up when hammer candles go against in the opposite direction? What about algorithms that find this? Kevin, that's a tremendous question. The whole point why this works is because it's not only algorithms, it's about investor psychology. And you can go back and look at this pattern and you will find the algorithms ultimately won't go against this pattern unless, of course, it was a weak formation of all this and investors weren't really washed out, right? That's the whole point about this. It's, again, like I keep saying, Kevin, it's not about the pattern. It's about algos and investor positioning in an extreme way in one direction or another, either extremely bearish or extreme bullish. And that's a tremendous question, by the way. It really is a good question. But again, that's why I'm making such a big deal. This is not about the pattern in itself, even though I'm giving you the visual depiction of it all. It's about what's behind it. Okay, and you can see what some of these people are saying. I mean, SS has made this pattern work for them 9% in 30 minutes. In 6 minutes, this guy made $800. And so on and so forth. And again, I'll show you guys much more about this. And by the way, if you want to use this for even more pop, you can use this like with simple moving averages, simple lines. Like for example, in the S&P 500 on the weekly chart, just to give you an example, this pattern has repeated itself over and over and over again at a simple trend line. So you can get even more pop with this pattern if you use it in conjunction with simple moving averages and simple lines, right? So before we go into the current market, I'm going to ask you guys to give me ticker symbols and anything else you want to look at. What you really should start doing, in my humble opinion, if you don't mind me say so, is don't just focus your trading or investing on like 3 or 4 stocks and then take every single signal that you see. Right? There's a reason why that doesn't work. The reason that doesn't work is because there is a high probability signal taking place every day. In fact, there's probably dozens and maybe even hundreds of high probability signals taking place every day, but they sure as hell don't happen in the same ticker, the same stock, the same futures contract every single day. Does that make sense? So instead, what you need to do is understand that the world is your oyster. What that basically means is have a broad set of universe of stocks or ETFs or even global markets if you want. And there's a reason. Let me give you an institutional example again. So I work with a lot of hedge funds on the client side as well, and I've done that my whole life. And so one of the reasons a hedge fund is set up the way it is because it can take advantage of any market basically in any direction, right? So it's not confined to 30 stocks in the Dow or 500 stocks or so in the S&P 500 or a few commodities. It can do anything. Does that make sense? This is really, really important. So if you're the kind of person who has 2 stocks or 3 stocks or 2 commodities on your screen, and you take every single signal on that commodity or ticker, you are doing yourself a big disservice. And expanding your horizon into other ETFs or stocks or whatever you want to look at is automatically going to make you more profitable. I guarantee you that. Give me a quick guess if that makes sense. That's super, super important to understand. So let's have a look at how this pattern works. And we've used this pattern now for a long, 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 long time. And so I'm going to show you guys exactly what this looks like. I'm going to skip a chart here because I want to make sure you guys see how this works. Well, we have been using this pattern. And again, like I said, I actually originally started developing this pattern when I was working at JP Morgan as an investment banker in fixed income. It's one of the I developed or was developing at the time at JP Morgan 2 different indicators. This is one of them. And so we asked someone to program this now, I think about 10 years ago. And it's been an absolutely beautiful since. And you guys have seen how this works. So I'm going to go into the current market right now. So give me some ticker symbols. And as you guys type in some ticker symbols, I'm going to just quickly show you a couple more historical examples. And then we're going to go into the live market. You can see a sell signal here in Tesla. The stock dropped 19%. On this stock, sell signal, buy signal, sell signal, right? All the same pattern. Starbucks, sell signal, the stock drops 7%. IMAX, the stock here, buy signal, the stock rallies 10% or so. Apple, stock rallies 7 or 8% after the signal, right? And so on and so forth. So show me your tickers. And also we're going to go and look at different time frames. So the first one here, comes from Lenny, and he wants to look at plug. PLUG. That's not surprising. Lenny, this is for you. PLUG, this is a stock called Plug Power. This is a daily time frame. And you can see the signals. So we had a signal or 2 signals here in February. Then the stock, since that signal, by the way, the stock is down 71%. Those were sell signals. Then we had a small buy signal there in April. The stock there rallied, 10%. Then we had a sell signal take place just a few days ago, late April. The stock then dropped 30%, and we just got a buy signal just the other day, right? So that's plug, PLUG. Can you guys see that? Another one, NIO. NIO, this is NEO, right? I think everyone knows this. And by the way, just so you guys know, I have a different screen resolution on my other screen, so I have to keep going back and forth. Here is NIO. I think my screen just froze. Here, you can see we had a sell signal just a few days ago, and since then the stock is down 22%. And by the way, if anyone wants to look at a intraday chart, let me know if you want to look at an intraday chart. I'm happy to show that on the intraday chart as well. Okay, let's have a look at UPS. This is for Steven. UPS, the last buy signal was here on March 26th. Since then, the stock has rallied 29%. You guys see that? All right, intraday. Yes, let's look at intraday in a second. Let me just do a couple more. Let me show you a couple more. Let me see. HACK, that's an ETF, right? All right. Here's HACK. Buy signal, right? Look at this. This is the exact pattern we just talked about, right? Selling, follow through buying, and this ETF then rallied 7 or 8%. This is just a signal from a few weeks ago. Okay. All right, intraday. So you guys want to look at some intraday stuff, right? Let's look at some intraday. Let's start off with, say, I don't know, like a 15-minute chart on the QQQ. Does that work for you guys? say a 15-minute chart on the QQQ. Okay. Oh, hold on. I have to go over here. I'm going to show you guys this on my platform here. I have to change the time frame quickly. Sorry, 1 second. 15-minute chart. Okay, so here is the QQQ. This is just yesterday. This is just yesterday. The QQQ gave us a buy signal here, and then another one here, and the stock or the ETF then ended up rallying 50 basis points intraday. The SPY. Let's look at the SPY if that did anything for us yesterday. I don't know. SPY, yeah, right before the open, SPY gave us a buy signal right before the open. This is a 15-minute chart yesterday, and the SPY rallied 1%, of course, as you guys know, on the day. You guys see that? Okay. How about a 5-minute chart? Sure, let's have a look at a 5-minute chart and see if we can find anything there. 5-minute chart, oil. I see some guys want to click oil, so we could look at something like an OIH. So everyone, I think everyone knows what that is. That's an ETF, right? So here we go. Let's see. So here's OIH. You can see the sell signals in the morning. They made a small sell signal that very quickly stopped out. And then we had a buy signal. This is all 5 minutes yesterday. 1% rally after the buy signal. And then a small sell signal into the close. You guys see that? Very simple, right? Are you guys following me in that? How about a random stock? SHW, I don't know, just coming up with something. Let's see what there is. SHW, is there anything? Yeah, here, at the open yesterday, SHW, Sherwin-Williams, the stock ended up dropping 80 basis points. This is an intraday chart, right? This works in any time frame. Who's starting to see that this pattern might work? And again, what we're trying to do is take advantage of the algorithms and investor positioning. That's the really key part. How about the Russell 2000 on a daily chart? That sounds good. All right, Russell 2000 on a daily chart. I have to keep moving my things here. Russell 2000 on a daily chart. This is just the past 2 weeks. Small buy signal here. Then the Russell rallied 4%. This is just a couple of weeks ago. And then we got a sell signal right at the top of the market on April 30th. The IWM then ended up falling 6%. You guys see that? Okay. How about a couple more? Bank of America. Sure, we can look at Bank of America. Here's Bank of America. Buy signal here. Another buy signal a few days ago. And the Bank of America's rallied like 8% or whatever that is. Starbucks on a daily chart. Let's have a look at Starbucks. Let me bring that up over. Sorry. Starbucks. Let's see if there's a signal. I don't know if there's any signals. Oh yeah, we had one. We had one here in February, and then the stock since then ended up rallying 12%. So, who likes this kind of pattern? Is it making sense? Right? The reason why this is so important, folks, is I'm not trying to teach you just a candlestick pattern. That's not what this is. What this is trying to understand where the algorithms are getting the better of you, right? So let's have a look at PLUG. Let's go back to that first example we just looked at that you guys were asking me before just a few minutes ago, right? Let me just go back again and show you. So what do you think happened up here? What do you think happened? What did the investors, the algorithms notice? They noticed extreme investor positioning, and that's where everyone was starting to buy, but the algorithm was starting to sell. So the plug then ended up collapsing like 63%. Then they were small oversold, buy signal, and then again overbought, and then boom, plug again dropped another 32%. Then we just recently got a small buy signal. Now keep in mind, this company reports earnings next week, so don't get into this signal right now. This is just one that I want to quickly show you. Perfect. So you guys are starting to see this is not about just understanding a candlestick pattern. That's not what this is. It's about understanding the other side of investor psychology. So this B2 reversal indicator that I just showed you, this is a proprietary algorithm. So what we've taken is the pattern that you guys see, but we've added, I'm going to say for the lack of a better term, our secret sauce to it. And I hate to use that term because it makes it sound like untouchable and kind of creepy, but that's exactly what it is, right? We've taken this and we've taken into account all that algorithm stuff, and we've made it into a beautiful little indicator. That's exactly what this is. You guys can see how that works, right? So the great thing is that what we've also done is created a bit of a scanner. So instead of having to use 2 hours of scanning every day manually, we've made this something that you can look for in just a few minutes. And I'll show you exactly how this works. But you can see, for example, Sam wrote us this a while ago. He said that he used to spend 2 hours a day searching for trade ideas. Now it's less than 20 minutes. And I can show you how you guys can do this in less than 1 minute. You want to see it? Who wants to see me do this in 1 minute? Or actually, probably 2 seconds. So here, let me show you. And this is exactly what it looks like. So what we have is we have essentially two variations of buy signals and two variations of sell signals. That sounds complicated, right? It's not. So here's how it works. So I need to go back to a daily chart so you guys can see this. So let's look at, for example, whatever this is, LLY. Oh, I have to bring the symbol down. So every single day, you get buy signals because the algorithms are complicated. So we created two versions of the buy signals. It's the same exact thing. They're exactly equal in terms of how good they are, but that's it. And you have two versions of bearish signals. So let's click at LLY, Lily, right? By the way, just as you guys know, we're actually probably going to buy Lily on Monday, just so you guys know. So you guys can see the overbought signal that Lily gave us on April 21st. The stock then ended up dropping 6%. Now the market rallied. Algorithms notice that people are getting bearish again, so it's giving us a buy signal. You guys see that? So that's all it is. You have the two variations of the buy and sell signals. These are the two bullish signals. These are the two bearish signals. And all you have to do is click on these, right? And then you find the signals. Super, super simple. You guys see that? All right, excellent. So that's how it is, super simple and something that you can definitely follow. So I hope this has been helpful so far. And if you think that this was time well spent, I would like to show you how you can get results even faster and even bigger results. And more importantly, better risk-adjusted results. And you can see what some of the people are saying, by the way. I bought this system in November, it's already made $900 on 2 of Serge's recommendations and paid for this 3 times over. So you should be able to see results very, very quickly with this. So what we know is that candlesticks, the way we look at it, show us investor footprints and investor emotions. And so what we're going to show you here is a no stress, simple, I'm going to call it a 3-pronged trading approach. It's a high probability swing trading, investing, or day trading method, and it's going to allow you to nail those reversals by taking the other side of investor emotions and trade with the algorithms. And you can see what some of the people are saying here. This guy made 30% in 6 days on Moderna. Ray made 25% on this on CCI. This guy's up 35% in UAL, FedEx 28%, and so on and so forth. Andrew had some nice words about us doing this with options as well. And by the way, if anyone's an options trader, all these signals on any of the stocks or ETFs or other asset class, you can also just use options on that, right? That's the beautiful thing, how you can leverage even more. So the B2 reversal indicator that I just showed you has a value of $997. That's the total value for the B2 reversal indicator. And again, we've just shown you that the B2 reversal indicator gives you these high probability bullish and bearish reversals, and it flashes on your charts, and it has the arrows clearly printed on your charts. You can install the indicator either on Thinkorswim, eSignal, TradeStation, NinjaTrader, or TradingView.com. In fact, I've been showing you this a lot today on both TradingView and Thinkorswim. Super, super simple. If you have another platform like Interactive Brokers or something, then you can go to TradingView.com, which is a free website, and you can create a free account and install it there once you have the code from us, right? So if your platform or broker is not listed here, then just use TradingView.com. It's super, super simple. But we're also going to throw in the scanner that I just talked about. That's another value of $497. So the total value between the indicator and the scanner is $1,494. So again, the indicator we showed you, very simple to use, really nothing to it. Takes what, a minute to use a day to find a high probability signal. And we, of course, will show you and help you installing this and using it. And I'll talk all about more of that in just a second. In addition to all of this, for the first 25 people, you're also going to throw in our members session. Every single month, we do a client member session where we give you actionable trade ideas, swing trades, investments, and day trades. That's an additional $797 of value, bringing a total to $2,291. In addition to that, the next member session is actually on May 26th. And we're looking forward to all of you guys that are joining, and the first 25 particularly that get access to these member session. Looking forward to see you on May 26th. And these sessions always get Wayne, that's your birthday. Wonderful. Happy birthday in a couple or week and a half from right now. If that's not enough, for the first 25 people, we're also going to throw in our renowned Ultimate Candlestick Bootcamp. That's another $997 of value, bringing the total here to $3,288 between the indicator, the scanner, for the first 25 people, the lifetime monthly member session where we teach you exactly how to use the tool, give you trade ideas, actionable trade ideas weekly for swing trades, day trades, and investments. And we also throw in for the first 25 people the Ultimate Candlestick Bootcamp. So you can see why all of this would be a steal even at $3,288. But what we're going to do today for the first 25 people is we're going to offer this for just $297. Again, it's for the first 25 people only though. If you're not one of the first 25, I think it's either going to increase the price or shut down. I'm not exactly sure, but it certainly won't be $297. So for the next 25 people only, this is going to be $297. And again, it's a lifetime deal, like lifetime access. I'm going to quickly review this, and I'm going to look at some of the questions. So what you're going to get right now, if you're one of the first 25, you're going to get access to the Ultimate Candlestick Bootcamp, which is our renowned candlestick course. You get access to the full beat to reversal indicator and scanner. That's another value of $1,497. Lifetime access to both. And again, for the first 25 people, you get also get access to the lifetime members webinars, which we do every single month, and we give you actionable live trade ideas and investment ideas and day trading ideas, and teach you how to use the indicator and scanner every single time, every month. That's another $797. So the value is $3,291, and you get started today for $297. All you have to do is go to thesteadytrader.com/get UCB. So I'm going to type this in, www.thesteadytrader.com/get UCB. thesteadytrader.com/get UCB. Great questions. So some of the questions are, what time of day are the member sessions? The member sessions are usually in the morning time, East Coast time, so around 11 a.m., which is 8 a.m. Pacific Coast. It is in the afternoon in the UK, and they always get recorded as well. What universe? Yeah, so the indicator and scanner works in any asset class. Any feed you want to use this. It even works in Bitcoin, right? I don't know if any of you guys are crypto people, but I'm just saying, like, it actually works in Bitcoin as well. So you can use this in any time frame at any game. But like, for example, look at this. If you guys don't believe me, here is a buy signal in Bitcoin on the weekly time frame that we received October of last year. Who would have liked to buy Bitcoin in October of last year when Bitcoin was pricing around 10,000, or let's say $11,000? Bitcoin is now, as you guys know, much higher, like 400% higher. Yeah, and by the way, if you're not a Bitcoin person, hey, I'm just trying to show you what the algorithm can do for you if you follow it, right? That's the point we're trying to make. So it's $297. This is a lifetime deal. This is not a recurring fee. You pay this one time and you're a lifetime member. You get access to the indicator, the scanner, the lifetime member sessions. Very simple. Once you log in, once you get the login information, you go to our beautiful website, thesteadytrader.com. You click on indicators, and that's where the B2 reversal indicator pops up. You click on that. That'll teach you how to install it. You get access to all the past recordings of member sessions. So let's say you want to install it on Thinkorswim. You click on Thinkorswim. There's installation videos. We have a great team that can help you as well. If you're not very tech savvy, we have a wonderful team that can help you with that as well. If you use, let's say, TradingView, simply click on TradingView. There's a video how to install it and how to use it. And again, the most important thing that I can probably tell you right now, if you're joining right now, and I see a lot of people are joining quite quickly right now, the most important thing, guys, is make sure you give this time. By all means, go ahead and install the indicator, but join us on the next members webinar. That's really, really important. Let me go back to this quickly. The next members webinar is on March the 26th, right? Now, you can watch some of the past recordings, but that is going to be the next live one. Now, if you want to watch some of the more recent ones that we've already done, you can go ahead and again go to the indicators page, B2 reversal indicator, and watch some of the past recordings. You can do that as well. Yeah, it's May. Yeah, May 26th. If I said March, my apologies. Obviously, March is in the past. Clearly, right? No, this cannot be installed in MT4. We talked about that before. Wayne, the way you can install the indicator, let me go back to this again quickly. You can install it on these platforms: Thinkorswim, eSignal, TradeStation, NinjaTrader, and TradingView.com, right? This here, for example, is TradingView.com. I showed you this. This is just the example I just showed you here in Bitcoin. We got that buy signal there, right, in October, and the Bitcoin exploded since. So can it be used in currencies? Yes, of course, absolutely. Of course, absolutely. This works on currencies as well. Yep, definitely. Yep. And so, yeah. Let me show you this. So this is on currencies. This is right now euro dollar. We got a sell signal on February 26th, then a small buy signal that didn't work, but it also didn't have a follow through buying candle, so it wasn't even valid, right? And we just got another buy signal here a few days ago. So yes, it does work in currencies. Absolutely. Yes. So this is, let me be clear. This is good for the next for the first 25 people. So $297 for the first 25 people. And if you are one of the first 25, you will also get access to also the member sessions, which we do every single month. And they give you trade ideas there. We give you actionable live trade ideas, day trades, swing trades, and investment trades, positions every single time as well. And yes, on this on TradingView, Tony, you use the scanner a bit differently. And if you watch the video, you can learn how to do that. And that's also something we teach you in the member webinar. So every single month, we do member webinars for a reason, right? We do that for a reason. We do it so you can learn how to use the scanner, how to use the indicator, and everything. Stu, so the indicator is a proprietary algorithm that takes into account a lot of stuff, right? So what we worked on, and again, I developed this many years ago at JP Morgan, started developing it. So we use a part of it is volume as well. It takes a lot of stuff into account. Yep. All right. Thank you, folks. I hope, was this helpful? Give me a quick yes. I know I want to pass it over to Jeanette again in a second, but let me know if this was helpful. Did you guys learn something? And again, this is not about just learning a candlestick pattern. This is about learning how to take advantage of the algorithms that constantly stop you out, right? That's the point here. So thank you all. I really appreciate that. Jeanette, I hope this was good for you as well. And I will pass it back to you.